Welcome to Eye U.S. stock. We watch markets with calm focus and sharp instincts. Thursday, May 28, 2026. Stocks flirted with an early breakdown, but then the classic playbook came right back. Mega cap tech, led by Microsoft, dragged the market higher into the close. The S&P 500 and Nasdaq both finished at new record highs, but the tone was narrow. Plenty of the market just didn't come along for the ride. Looking at the S&P 500 heatmap, it felt like two markets at once. You had aggressive green clustered in software and semis, and that's exactly where the index points came from, especially Microsoft. But step outside those leaders, the board was mixed. Darker reds bleeding into financials, energy, staples, and real estate, and one massive tell. Synopsis. It showed up as a glaring red outlier inside an otherwise incredibly strong AI comp. So where did the money go? The flow stayed risk-on, but highly concentrated. Buyers just kept pressing into the AI stack, cloud spend, chips, software platforms. Meanwhile, the slower, rate-sensitive corners, staples and real estate were treated like dead weight. And energy didn't catch a defensive bid either. Why? Oil cooled off hard following ceasefire extension headlines out of the Iran talks. So the real tension today wasn't panic. It was durability, geopolitics, inflation heat. They were on the screen, but traders just treated them like background noise. They kept paying up for growth and AI leadership. The S&P 500 and Nasdaq confirmed that strength with record closes. But participation stayed so narrow that the next question is simple. Do the leaders get follow-through, or does this lack of breadth start to matter again? One major piece of market chatter shaped the whole vibe today. Talk of a tentative 60-day ceasefire extension tied to the Iran discussions. Traders treated it like a volatility suppressant, especially for oil. Now it's still headline-driven and absolutely subject to reversal. But the important part isn't whether it's a done deal. It's how it completely shifted trader behavior today. Microsoft was the absolute gravity well. The stock gained nearly 3.5%. And in a narrow tape like this, a move that big in a mega cap can flip the entire session. It is a textbook example of how index strength can look totally decisive, even when the broader market underneath is incredibly choppy. Over in software, Snowflake was the narrative driver. The stock jumped on a blowout quarter and a strong outlook. Plus, they announced a massive 5-year, $6 billion AWS commitment tied directly to AI infrastructure. The market's takeaway was simple. AI cloud spend is real, and that kept the broader software and cloud bid totally intact, putting AWS read-throughs, like Amazon, front and center. Palantir was a crystal-clear risk on tell. The stock surged over 8% on positive contract and partnership headlines. The broader market was already leaning hard into AI software momentum. But when names like Palantir rip like this, it signals traders are actively chasing high beta leadership. They aren't just hiding in the megacaps anymore. In semis, AMD popped roughly 4.5%, keeping the AI and chip complex fully in control. The key point here wasn't some single headline, it was the rotation signal. Traders are still paying up for compute exposure, and when semis act like this on a record index day, it just reinforces the market's favorite storyline. But synopsis? That was your caution sign. Even after reporting strong results and raising their full-year outlook, the stock dropped. Traders digested the print and immediately started sweating the guidance and segment mix. In a market totally obsessed with AI winners, this kind of divergence really matters. It proves just how fast the tape will punish a good quarter when expectations are priced for perfection. Energy was today's laggard, and Exxon really put a number on it. Shares fell about 0.5% as oil cooled off on those Iran ceasefire headlines. The bigger picture here, stocks hit records while energy faded. That signals the war premium impulse is easing, at least for today. And that matters big time for how traders are pricing inflation and rate sensitivity. Looking ahead, we've got a pretty clean checklist. First, geopolitics. Any new details on that 60-day ceasefire framework could swing oil and sentiment in a heartbeat. On the calendar, Monday, June 1st brings ISM manufacturing, then JOLTS on Tuesday, and Friday, June 5th, the big one, the U.S. jobs report. For positioning, the immediate test is simple. Do the leaders get follow-through, or do we face the same old breadth problem? Keep your eyes glued to Microsoft after today's run, Snowflake, after that massive AWS deal. NVIDIA as the ultimate stability test for AI, AMD for continuation, Exxon as your oil pivot, and CRCL as your speculative risk thermometer. So, today was another record close, but definitely not an everything rally. The market leaned hard on AI and megacap leadership. Meanwhile, defensive and rate-sensitive corners stayed weak, and energy faded right alongside oil. Heading into the next session, the ultimate question is this: do the generals keep marching? Or does narrow breath and headline risk finally start showing up in the tape? Thank you for watching Eye U.S. stock. Stay curious, stay calm, and we'll see you next time.